Welcome to the FNO InsureTech podcast, a place where movers and shakers from all points within the insurance ecosystem gather and discuss all things InsureTech. We talk about how technology and innovation are affecting and driving change in the industry. Here are your hosts, Lee Boyd and Rob Beller.
Hey, podcast world, welcome to another. Not just any, but another wonderful edition of FNO InsureTech. I'm Rob Beller. He's Lee Boyd, also known as the Smart One. He's in Waco, Texas, still in Waco.
Yeah, haven't moved.
I'm in Sacramento, California, still. Been here for 11 years now.
Yeah, you have better internet.
But both of my sons are in New York. I guess New York City. Is Brooklyn New York City?
It's a borough of New York. Yeah, they're all the boroughs like Manhattan, Brooklyn. So yeah.
Do they all make up New York City, or is Brooklyn its own city? I think it's its own city.
I think it's its own thing, but it's a borough of New York City. I think the NYPD still oversees it.
Can we get some of our really smart audience to write us and tell us, is Brooklyn a city? I think it's a city.
Yeah, I think it's officially a city, but it's in there.
It's both. Yeah.
It's like there's probably a suburb in Sacramento that is still Sacramento, but it's its own little city.
Yeah. It's like New York, New York. It's a city and a state. It's a borough.
Almost, but no.
It's a borough and never mind.
Yeah.
Never mind.
We digress.
We do digress. Is that a problem? Do you think that's problematic?
It might be.
Do you think that's a sign of a sick mind somehow?
It might be. But you know what? You know what? As we digress, I want to say this is a sad day for me.
Wow.
This will be. I have been sitting in the same building for 4 years doing a podcast, and this will be my last podcast in the building that I'm at. I am transitioning. I'm transitioning to a work at home.
Wow, Lee, this is a big day. So hey, FNO audience, Lee, your co-host for 4 years. Yeah. And my partner in crime for longer than that is saying goodbye to his office.
I am. It's a naked office now. All the walls are bare. The books are gone. But I have a nice little shanty at my home that I have made myself a spot that I'll be moving to. And
we could call it a shack. We could call it. You have a shack inside your garage.
I have a shack in my garage made of wooden pallets and drapes.
Mm-hmm. I love that song, Love Shack.
Yeah, that's a good one.
Yeah,
I think of the Flintstones.
B-52s. No.
I think of the Flintstones when they sang it. I digress.
So, well, congratulations. Good luck with that.
Yeah, it'll be great.
That's exciting. Mm-hmm. A whole new chapter. I know you don't like change.
I don't like change. I have the same routine. I always do the same thing, but this is a good time to break habits and see exciting corners of my garage that I haven't seen in a while, and I'm very excited about it.
Speaking of breaking habits, that leads right into our guest today.
Okay, how so?
I'm thinking about that as I speak. I got nothing. I was going for that with New York. That's what New York was.
Yeah, but I derailed you.
You took me. You needed a moment. If I was there,
what about
in Waco
change?
with you? I'd give you a hug. I'd hug you.
Well, thank you. I appreciate the virtual hug. What about change and how sometimes in life there are changes that we need to be prepared for?
Yeah, like you die.
That's a big one.
Sometimes there's a change in life like you're dead.
Yeah.
Sometimes there's a change in life like somebody else is dead.
Yeah.
And like I'm sure many people who listen to our podcast, they're worried. They're concerned. They think about if that was to happen to me, if I was to lose my life, would the people that stay behind, the people I leave behind, are they going to be taken care of financially? Mm-hmm. Or are they going to have a bridge financially or anything, right?
Right. Yeah. I'm sure everyone listened here has had that thought.
So that would lead them to the doorstep of somebody who sells
life insurance.
Oh, Lee, there's no getting that.
But what a complicated world life insurance is. What if there was a company who helped advisors understand and reduce the time for underwriting and get people insurance? Wouldn't that be awesome?
So kind of a platform to supercharge them.
Yes. Why don't we start one?
Well, because we're too late.
Oh, has somebody already done it?
Someone's way in front of us. And that someone is Michael K.
Yeah. We'll get his full name in a little bit.
We'll get you his full name eventually. That's Michael. And Michael is the CEO and co-founder of Modern Life.
Yes. We are going to get to talk to Michael today about his story, about the founding story, what it is. It's a platform that works with advisors. He decided that life insurance is too complicated and it takes too long to get. And he's finding ways using technology and relationships to get people the right policies that they need and using technology to get it quicker.
And this podcast was a joy. It was a real pleasure to do for two reasons. One is the information, the story, the anecdotes that he was able to share with us, and also knowing that he was sitting where my two kids live.
Yeah,
in New York,
right there in New York,
in New York,
one of the boroughs.
Yeah, but we're not exactly sure. Oh, Soho. He was in Soho.
Yeah,
he was in the city.
Soho. Yeah, Lafayette Street, I think.
Yeah, we need to get this figured out. We need to get the whole: is Brooklyn a city, or is it a borough, or is it both, or what?
It's both. I'm 92% sure.
Okay.
But while we do that, why don't we let our audience listen to this fascinating podcast?
Beautiful idea. Beautiful. Always. That's what I love about you. Even though you're going to be working in a garage, you always care about the customer.
I do.
So without further ado, let's get to our interview with Michael Konialian, co-founder and CEO at Modern Life. Hey, everybody. We are here with our special guest who's joining us today from
New York City.
Oh, exciting. The Big Apple.
The Big Apple. The city that never sleeps. Or is that Las Vegas? I don't know.
No, I think it's New York.
Is it?
It's not the Windy City.
Okay. It's not the Windy City. And we have with us today the co-founder and CEO of Modern Life, Michael Konialian. How did I do, Michael?
You did pretty well.
Correct me.
So it's Michael Konialian.
Michael Konialian.
Good job, Rob. Good job.
Very good.
And just so you all know, we tried to take some time because as for those of you who listen to us regularly know that both Lee and I suffer from low IQ. And so we often struggle to say people's names. And today's no different. And so for that, we apologize. Well, we'll just call you Michael. How's that?
Perfect.
Okay. So thank you so much for joining us today. Life is a segment that we have covered a little,
just
not a lot. And but in the little bit that we have covered it, both Lee and I have found it super fascinating and interesting and intriguing because it's like not talked about a lot, but kind of important to a lot of people. Did I get that right?
I think that's dead on.
Okay. So we're gonna blow that all out of the water today. And first of all, let me say welcome to our podcast.
Thank you. Really happy to be here.
Michael intimidated us in the beginning by telling us that he's done like 7 or 8 podcasts.
Yes, so he's a veteran of podcasting.
He's a podcasting veteran. And so even though we have a couple hundred episodes that we've done, now Lee and I are really challenged. So if we ask these amazing questions that surprise you all that we're asking, it's because Michael has, kind of
helped us out there.
He laid down the gauntlet for us. So Michael, welcome. Thanks for being here. And let's start by having you tell us what Modern Life is, what your job is there, and so on and so forth.
Yeah, super thrilled to be here and share more about what we've built. Modern Life is a technology-enabled brokerage focused on life insurance and other financial protection products. Really one of the core insights we had is that it was just very challenging to buy and sell life insurance. So even through my own experience, I have a family, and when I set out to buy life insurance for them, was really just floored by how challenging it was to get things like in-person medical exams, hour-long phone interviews where you go through every possible medical ailment. I had to fill out 50 pages of paper application forms, and the whole process takes months. Even for someone like me who's reasonably young, healthy, not buying a ton of insurance, and really just from my own personal experience with it, just felt that there should be a better way. And in particular, one that can really leverage a lot of the, I think, advancements in, financial technology that have come about in the last 10 years and really build things that, help bring what is a very important buying and selling experience, but on a more contemporary technology stack, and in a way that's just honestly easier for clients who are purchasing it for their families. And also one of the things that makes this unique, important for advisors, where this is their business or part of their business. And, what I do at Modern Life, as the co-founder there, is really obsess about advisors and, what they need to be successful, and in particular to meet the, financial risk management needs of their clients. And how do they understand, the products that are out there? How do they have conversations with their clients around, what their clients' needs are, any specifics related to, medical underwriting, that can help direct them and help match them against, the right carriers and insurance products that meet those needs, helping really facilitate and streamline the quoting and application process, and also helping, advisors manage across their deal flow, help manage their practice, deal with all the errata like commissions and carrier contracting and all the different pieces that go into it, because, life insurance, for being as important a thing as it is, and, even though there's 500,000 financial professionals who distribute it every year, it's just an incredibly challenging thing to do, even to this day.
Yeah. Define, when you say advisors, narrow that down or define the category or categories that's included in that.
Yeah, typically we'll include anyone who is a licensed life insurance agent. And we're fairly open on that definition. We typically like to focus on advisors that serve where life insurance is a material part of their practice.
So like a financial advisor?
So they could be a financial advisor. So, could be someone that, has a large practice in investment advice. And I think life insurance is a great dovetail to comprehensive financial planning, right? Thing 4 of every annual financial review is always going to be risk management. And, life insurance estate planning, that's a big part of that. It also could be, more focused life insurance advisors. And it could be property and casualty advisors that maybe have a lot of business owners or
like an independent agent.
Yeah, an independent agent as well. So there's sort of different types of advisors that could use it. And actually, in many cases, the needs are fairly similar. Maybe the business mix might be different. If I'm more life insurance oriented, I might do more complex cases, do more like big estate planning cases, things like that. If it's maybe part of my practice, but not the focus, I might have more cut and dry, business planning or individual cases.
So Modern is a platform that advisors can go on to not only find the product that they might need for their client, but also find information and advice like, hey, Modern, I have this particular case. Here's the parameters of the case, and you guys can help them. You guys help them to create a plan for that customer, for that client.
Exactly. Okay. Yep. And really, there's kind of 3 legs on the stool in terms of that offer. So first is the technology platform. So you can actually do this whole journey online where you understand your client's needs and underwriting parameters.
They need a 20-year term, $500,000 term policy. Boom.
Exactly. And then we'll, based on their unique health profile, be able to assess which carriers are most competitive, pull in real-time product details and rates, help bridge that to a digital application, and then help you manage that across the cycle. Mm-hmm. We also have a full service brokerage capability. So where you need expert advice, it's a more advanced strategy, a more complex underwrite, helping you manage sort of the case across the application underwriting process. Mm-hmm. And then we also provide access to a leading panel of carriers. So we have over 15 top carriers, folks like Lincoln, Prudential, John Hancock,
AIG.
AIG, the major ones.
Major
most
players.
of them are top 15 carriers.
They must love a company like yours.
Yeah, I think there's been a lot of really great pull from our carrier partners. And I think that's due to a couple of reasons. I think one, carriers really appreciate the advisor channel, right? It's a longstanding channel. They know the business. They like the business. It tends to have better performance from like a loss performance and, persistency staying on the books. And the second is that, carriers really over the past 5 to 10 years have, come to the belief that the world is changing sort of now from a digital transformation. And, what was in the past always something of the distant future now is something of the present future. And our approach of, combining a channel they know and like with the technological sophistication and, sort of the way of problem solving of a venture-backed high-growth startup, that's really just been very appealing and sort of being on that leading edge of innovation for that channel.
And so your founding story started because you were struggling to go through the process of buying life insurance. It was cumbersome. There were a lot of things you needed in it, but now we hear that you are changing that. So are you responsible for the underwriting? And if so, what are you doing? How are you capturing the information you need without going to the blood and urine and 50-page of application?
Yeah, it's a great question. Right now, we are the advisor's right-hand man. So we're your advocate. We are your counselor when it comes to underwriting.
Kind of support for the salesperson, if you will,
exactly,
for the direct salesperson. Okay.
Exactly. And that takes a few different ways. So one thing we do through the technology platform is we help identify and direct advisors to accelerated underwriting experiences where they're available. So the majority of our policies are written on an accelerated basis, meaning you don't need, full medical exams and doctor statements and things that will cause policies to take months to get written. And, we really think that's an underutilized tool. The second thing we do is we really collect structured inputs and in data of what are the medical factors that will cause carriers to come to different underwriting decisions. So we can say, oh, well, you smoke cigars. Well, for some carriers, they're going to give you a tobacco rating. Other carriers, they won't. So let's focus on the carriers that won't. Carriers have different comfort levels with things like cholesterol or blood pressure or family history. And, we'll help navigate those. Mm-hmm. And then for, larger cases, and certainly any case over, $5,000 of premium, we're going to really go deep in medical records and get medical opinions and actually be able to really craft a narrative around that case to make sure that advisor can get the most competitive offer. And really, in partnership with the advisor, in partnership with the carrier underwriters, really digest what's the story for that client's underwrite and make sure that we can get them the most competitive offer.
And your platform helps identify all that. Like, I smoked cigarettes, but I quit 3 years ago.
Yeah, exactly. So we'll ask you what type of tobacco, when was the last time you had it, and we can kind of use all those factors, and then have mapped that against different carrier appetite. So we can actually say, for your specific profile, as a, person that lives in this state, that's this gender and this height and weight, that has these factors, here's where we think you'll be able to get. And then, more data might come up in underwriting or it might not, right? And, we can use that as a basis to certainly launch or bring that application further. And, we think that by getting the right data up front and using that data and analytics to be able to underwrite well, you're going to get the most competitive offer. So you're not going to have to go back and check out another carrier and go through the whole process again. And, our real goal is to bring the process from one that takes months to weeks to minutes.
So your goal is to have the channel that you're after is the advisor channel. We're not going to see Modern Life ads on CNN, right?
Not unless it's an advisor-oriented show on CNN. So, okay. That's really, I think, one
your
of the
distribution. Your main distribution is through them, and then your monetization comes from selling policies.
Exactly. Yeah. So
you split somehow with the
exactly.
With the
so
broker.
we provide very competitive commission rates to advisors who come onto our platform. There's no fee, there's no charge, there's no retainer, and all the breadth of the technology platform, the expert support, the access to carriers, all that comes for free. And we win when the advisor wins in terms of getting sort of compensated for cases placed with carriers.
I would think that your space would be somewhat competitive with other tech startups that are trying to achieve the same thing. Am I right or wrong about that? I mean, we haven't come across anyone else like you, but what's it like out there?
I think there's been about $1 billion of venture capital raised really around the direct-to-consumer market, which is largely focused on kind of more transactional term, smaller face amounts, typically less than $1 million to $2 million of coverage, typically for those that are younger or healthier, or at least within the box, as you were. And, almost all the investment has pretty much focused on that segment. There's been some others who've sort of expanded, and the next step is, okay, let's still focus on, the smaller end of term products, but start marketing them through advisors. Some of these are dedicated companies. Some of these are companies that started direct to consumer and are either pivoting or trying to market to advisors. But as far as we know, we're the only ones, that have a truly technology backing that are focused on, 100% of the deal flow of, sort of the top advisors. Those that have permanent products, and we have a full panel of permanent products, that includes universal life, whole life, we sell variable products. We sell a number of different products because not every client need is the same. Term is a great need for many people, including people like myself. It's not the right need for others, right? If I'm doing a business succession plan, you probably want a permanent product. If I'm doing an estate plan, you probably want a permanent product. So, it's really, we want to provide the full arsenal of tools for an advisor to have in their tool belt. And sometimes they'll need a transactional term solution, but many times they won't. And, if you look at the life insurance market as a whole, the considerable amount of premium dollars, the considerable majority, I would say, is sort of outside that bucket.
I want to ask about the founding, the startup. It looks like you started this about 2 years ago. Is that right? And
That's
so
right.
Tell me about that journey. What is, what surprised you? What came about that you thought, I'm sure in your head, you're like, we're going to do A and B and C, and we're going to go to market and it's going to be awesome. Tell us a little bit about that journey. What surprised you?
Yeah, absolutely. We started the company a little under 2 years ago, and I had spent the previous few years at an InsureTech in the property and casualty space called CoverWallet, and through that experience, had a number of reps of building technology-enabled brokerage businesses for different property and casualty markets, whether it be property or workers' compensation or professional liability, and in particular had focused a lot on building for advisors, both when CoverWallet was still a startup and then after, it was acquired by Aon, which is a large brokerage. So had a lot of like domain experience from there and thought that life insurance would just be an extension, of that, of like, I've, gone from property insurance to workers' compensation to professional liability, and all of those are a little different from the other one. And I thought this would be, the next thing along the line. And I was kind of surprised by just how complex it was. Sort of knew that it would be complex, but, I think there's so much complexity under the hood in life insurance products. I think that's why advisors are intimidated in many cases, especially if it's not their primary product they distribute. There's complexity in medical underwriting and understanding sort of, medical nuances and how they might map to carrier appetite. I think there's complexity in how the products are actually structured, like trying to explain an indexed universal life product to someone. And, there's a floor, there's a cap, there's an expected performance that's tied to the market. It has this profile over this period of time and these guaranteed and non-guaranteed assumptions. And then, there's also complexity in how it's distributed, right? In property and casualty, you typically get a straight offer, right? I want the risk or I don't from a carrier. In life insurance, there's many more requirements before you even get an offer. And then once you get an offer, it's, there's sort of shades of gray, right? All of those things, I think, sort of made the experience just materially different than it was in property and casualty. On the flip side, though, there's sort of much more potential, I think because it's harder to understand the product, because it's harder to get offers from carriers. There's just more data involved. I actually think that's a huge opportunity for us to really distill and synthesize and make things accessible and easy, but still sophisticated for advisors. And we actually think there's like a huge potential to like unlock opportunity. And I think it's starting with the company, very quickly we realized, that we would need to invest pretty significantly on both the technology and in building the brokerage expertise. And, we've sort of built this feedback loop where, we build technology solutions, we test them out in the wild with advisors and the brokerage team, we collect their feedback and both are able to optimize what we've built and then understand the next thing to build. And have been able to just run a lot of quick feedback cycles, first with a small group of advisors and now with a considerably larger group of advisors, as sort of the company's grown from their early inception.
You identify life as an interesting area where there's a lot of friction, and you go forward in it, and it must have been like so surprising how complex it is, how nuanced it is, how many different forms, shapes there are in the life product world. But you're a tech guy and your co-founder's a tech guy. So how in the world did you get the information that you needed to know? I mean, did you go out and like kidnap a life insurance salesman?
Basically that. One of the better decisions we've made is, one of the first people to join the team was our head of distribution, a gentleman named Dan Pearson. And, Dan, I think among his qualities, one of the things he's really exceptional at is he has really deep brokerage expertise, but also gets how technology works and is able to sort of use both parts of his brain. At the same time, in his past, he had built a couple general agencies, and then also started a startup in the space. Sold one of the general agencies to Gallagher. Sold the startup to SBLI, which is a carrier in the space. So just came really loaded with a lot of knowledge. And whereas my other co-founder, or my co-founder, Jack Arenas, came from fintech, which I did too, having that complement of the, sort of deep technology experience with the real deep brokerage experience, I thought was really powerful. And, in particular, I think Dan has exceptional empathy for advisors and what they need and what's frustrating, what needs to work right every time. And I think that's been really valuable as we, try to build technology solutions, as we try to build brokerage solutions, as we, refine the panel of carriers we provide. And since then, we've been able to add on and layer additional, depth on the brokerage team, and that's been really invaluable.
When you've hit resistance in signing up brokers onto the platform, because there's not a monetary aspect to it, right? I mean, they say yes, you provide it. Why hesitate?
Yeah.
Why would a broker hesitate?
It's a great question. Life insurance is a 150-year-old industry. And for the vast portion of that, things didn't move all that quickly. Sure, carriers, gain share, loss share, brokerages, gain share, loss share.
Ledgers, pencils.
Yes, but it's a relatively conservative industry. And, every advisor has a brokerage partner typically in life insurance that they work with, certainly on the independent side, to get deals done, to access carriers, to get advice on products, to get tools and technology they need to distribute. And, everyone has a relationship. We're very much the new guy on the block. But I think the specific timing of when we launched in the height of COVID. And the world is changing faster now than it has at any point of the 150-year history of life insurance, right? Almost overnight, in-person, literally kitchen table conversations, became Zoom meetings. These 50 pages of paper application forms became digital forms.
Yeah.
Underwriting that used to be done by, poking you with a needle can now in many cases be done, using your data, and done on a predictive basis. And that world's just changed very quickly. And advisors are adapting to it as well. It hasn't been an easy transition for them. It was hard enough the old way, right? And now you're changing things up. So really the biggest thing we're competing with is inertia. And I think for us, it's both demonstrating that there can be a better, faster, easier way. But then also we think there's a huge opportunity to create a lot of net new business, right? By making it 50% easier, you're probably going to unlock 25% more opportunities.
Right.
And, that'll help advisors be able to expand their practices with actually probably less effort.
Yeah, I wonder.
Just by having everything be so streamlined.
I wonder how many people abandon the search for life insurance. They start, it's like, oh man.
A huge percentage.
This is too complicated, forget it.
I can't do it today? Oh, no.
Or it's hot today. It's a hot topic today, but tomorrow not so much. I mean, is that part of what you're talking about?
Well, on the client side, especially, it's always the 9th thing you have on your plate to do that week.
Right.
Mm-hmm.
Right. And it's the last thing you want to think about. It's an awkward conversation with your spouse.
Right.
It's an awkward conversation with your advisor. It's not a fun thing to buy, right?
Everyone knows they need it. Everyone knows they need it, but no one wants to think it's, you don't want to think about mortality and I'm going to actually have to use it. So it's the last thing.
And if I need to print out 50 pages of forms and, hand sign it and scan it and upload it and send it back to people, or
all those reasons not
chase down signatures or call doctors, and you're adding friction to what is already a high friction process. Versus for us, if you look at the modern life version of those experiences, you can typically do them on your phone. We've been able to distill things, where you're not repeating information multiple times across multiple things. It's really just streamlined. It's predictive. It's accelerated in most cases. And, you're taking this experience that would otherwise take months and bringing it down to something you could do on your phone in, minutes. And maybe there's a follow-up that takes weeks.
Have you found a way around the a nurse is going to come to your home. She's going to take your blood. She's going to, take your blood pressure. Have you gotten around that?
It's a great question. So we're working really closely with our carrier partners on basically solving this exact problem, which is how do we increase the fraction of the population that needs this product to qualify for accelerated underwriting, meaning that where you don't need a medical exam, and to really get to as close to an instant decision as you can, where it's either instant or at least very fast. And if you look 5 years ago, maybe 5% of deal flow went through that process. Today for most distributors is probably 25%. For us, it's the majority of what we do.
Really?
But we want to make it 90% of what we do.
Wow.
Really, we're as long as you're a standard risk, you don't have a very significant medical impairment where it makes sense to kick the tires. Mm-hmm. We want to make it where you can, push button, get quote, walk out with a policy, but one that's been really reflective, where it's given carriers real data that they need to make competitive decisions. We're not just going to stick our thumb up and underwrite, and in insurance terms, you can do that if you charge 25% more, which is, mind you, what some InsureTechs do.
Right.
But we really want products that are priced competitively, meaning they're underwritten properly, that is still able to be really distributed in a streamlined way.
Is there a time in the future where you could use just like an Apple Health to underwrite somebody? I mean, I look at my Apple Health and it has everything. Every workout I did, every calorie I burned, every yearly checkup I go to, all my blood work. You can just plug into that, right? Will that day come?
Yeah, I think absolutely. Right. Where, if you think of a mosaic picture of someone, and anything that you can have structured that you can loop in, mm-hmm. I live in New York City, I walk 10,000 steps a day. It's probably a good sign, right?
Right.
But there's more data than you think out there that can be utilized. And it's really now just a process of working with the carriers to be able to ingest that data. I think electronic health records have come a long way.
Yeah.
Both in terms of things that are structured that we can digest instantly, or even things that we can just get delivered electronically very quickly, right? So if we can bring the time to get health records from 3 weeks to 3 days, that actually shaves off a lot of time on the process. And
it does. It does.
Each friction point along the process, we've sort of figured, or fixated on to be okay, how do we get this instant in many cases, and where it's not instant, pretty fast. And if we do that over and over and over again on delivery, on underwriting, on collection of application inputs, on collection of medical records, if we just solve every one of those problems, ideally, the considerable majority of people can just push button, get quote. And if you can't, maybe we just check a couple inputs, get back to you pretty fast.
When people get a 20-year policy, do they tend to keep it for 20 years? Is that the tendency?
In the advisor channel, they do. Mm-hmm. Where, the price doesn't go up, like a 20-year term. Yeah. It typically, we've seen pretty high persistency rates for policies, certainly the ones that we've put on the books, but mm-hmm. in general, across the advisor-driven business, mm-hmm. It's pretty high. It's probably less so on the direct side for a bunch of reasons, but it's typically not something you change your mind every year. Like you might, an auto insurance policy where you might reshop it every couple of years.
Yeah, you set it and forget about it with life insurance. Right?
Yeah, maybe just a few times in someone's lifetime.
Yeah, you might buy another policy and add to it, but you're not saying, oh, okay, I've spent enough on that one. Let's go find something else. Because you're
exactly,
you've already done it. What is your average life insurance policy that you're selling? What's your average value?
Yeah, for us, it tends to be a bit higher.
I assume a bit higher because it's advisor based.
Yeah, so certainly it's a bit higher. We also do a lot of permanent life, which tends to be a little bit more expensive. Mm-hmm. We'll work to get the best value for that. But, permanent life is not just an insurance product, like because it generates cash value, because it has sort of other uses in terms of liquidity and sort of cash value growth. It is a sort of hybrid insurance investment product.
Yeah.
And because of that, it will cost a little bit more than a term policy, which is a pure insurance product.
So those are also known as whole life. Is permanent life a synonym?
Yeah, so whole life is one type of permanent life product.
Yeah.
So traditionally, before there was a more variety of products, there was only whole life. Nowadays, variants of universal life are quite common. That's probably the majority of permanent life today. But there's good uses for whole life too. Whole life has high amounts of cash growth and guarantees typically. Every product in the belt has a different purpose, right?
Yep.
And for someone that's probably valuing, sort of cost effectiveness and flexibility, universal life's better. For someone who's more conservative, wants something that they know is going to be around, like the Cadillac, whole life's still a great option.
Yeah. So now that we have you and you're stuck with us, and we're your 9th podcast. I'm not going to get over that if you haven't noticed.
The number
yet.
Keeps on growing. I
was about to say, I think
I've done 5. It's sort of started the conversation at 7.
Yeah, you've done 4 since you started. So.
Yeah, exactly.
Well, you could do 2 at the same time.
Yeah. You could. That would actually make a lot
how
of
would
sense.
anyone know, right?
I recorded this. You can overlay your questions.
I'm interested in some of the horror, weird, strange stories. Okay, one of the things about being in your business must be you come across all kinds of strange, weird things. Like Lee and I work in property and casualty every day, right? And that's like, the dog bit you or the roof, got damaged or, that's it every day. But you must have interesting stories. Now, of course, confidentiality is super important in your business, but can you share, you got to share, there's 2 things I'm interested in. I'm interested in a big case. Like, what's a big case? Like somebody that's worth $3 billion. No, I don't know. I mean, like I once had a friend whose parents were very wealthy and we were talking about life insurance and I was telling him about a life insurance deal that I did for myself. This is years and years ago. And he said to me, "Oh, I don't have life insurance." I said, "How could you not have life insurance?" He says, "My parents are worth so much money. I don't need a life insurance policy," which was kind of surprising to me, but it just goes to show you that there's as many people as there's that many cases. And so share some of those things if you can.
It's a great question. I think the one really interesting thing about this business is that everyone is unique when it comes to both their financial situation and their health profile. Like I am a financial snowflake and I am a health snowflake, and you put those things together and, the policy that's right for Michael is going to be different than the policy for Rob is different than the policy for Lee. And certainly a big policy for us is, much larger than typically things I would do in my past life. A large policy for us is over $100,000 of premium, not death benefit. That's probably different than most others in this market. But without getting into details, there's a lot of things that happen. People, and there's things that you discover sometimes too, where people have life experiences, and some people have done drugs in the past and that didn't go well and ended up in a hospital, and you find out about it, pretty late in the process, and that's something you have to deal with, and maybe sort of change your strategy a bit on how to get that person covered. So, there's always things that come up, and I will say one byproduct of this, because I myself am a licensed agent in life insurance, and I have a sort of a private practice where as part of Modern Life I'll serve usually like friends, family, other founders, and you learn a lot about people you talk to.
I would think so.
And especially now, I think people are fairly open about it, which I think is generally a good thing.
But it touches a very private areas of your life, right? The things that you don't talk about with almost anybody.
Exactly. And I think, really our goal has been to establish ourselves as a trusted counselor, and to earn that relationship with our clients. So we look to earn that with our advisors. We really look to recruit advisors who have those relationships with their clientele. And we think trust and security, and that goes into like data privacy and all the things we care about as, really big parts of making that real, because, people have histories and it's important to be truthful about them, actually, because in many cases, just knowing about it will help us get people really good offers quickly, right?
Mm-hmm.
Carriers don't like surprises.
Mm-hmm.
Advisors don't like surprises. So actually having that level of trust and candor is I think, really important. So
I own life insurance.
Good job, Rob.
Lee, you own life insurance, don't you, Lee?
Many policies.
See, that's so Lee Boyd.
Well, my dad sold life insurance for 40 years, so.
He forced you into it.
No, he had he would buy them along the way, and now I get them.
Oh, okay. I'm not sure how that works, but okay. I'm actually on my second one.
Good father.
I had one a term policy I had a whole life policy for a while, but I let it lapse because I was broke for a little while. Here we get into the transparency of your life, right?
Yeah.
I had this whole policy. It was like accumulating value.
Cash value,
it was awesome,
yeah.
Right? And then divorce, no money. I had to cash it out, and which was kind of nice. But I've had two term policies.
A benefit of a whole life, yeah.
Which is a benefit. You have the cash if you need it.
And my last one was interesting because, and this is kind of just one of the last topics that I want to cover with you. So the one before this was a 10-year policy, I think.
Mm-hmm.
And it was running out. There was like a year left or a year and a half. And I thought, you know what, maybe I should see about a new one now, because I know the older you get, the harder it gets,
mm-hmm.
or the more expensive it gets, maybe more accurately. And so I applied for a 20-year one, and I got a 20-year policy at the highest rate, right? At whatever they call it, preferred, whatever.
Oh, at a
premium.
Good rate.
Yeah,
preferred best.
Yeah, and that's right, preferred best.
Good for you.
And well, thank you, Lee. That's my whole point is that I did that. No, that's not my point.
Even with all of the drugs?
My point is that it occurred to me afterwards that there's a bunch of smart people who think about this kind of stuff every day, who think I'm going to live that long, right? Because it's a bet. It's just a different. I'm sure that all life insurance is owned by casino owners. I'm sure of it, because it's a bet. And the bet is you're not going to die, right? And I'm going to underwrite up to a certain barrier where I'm comfortable you're not going to die, right? Of course.
Or I charge enough premium that it's okay.
Well, but even then, you don't want to write a policy. I guess a permanent policy ultimately that's going to happen. I don't know, but
yeah,
I thought that made me feel good. I was happy. I was
happy that someone believed.
I have a glide path for 20 years. This is cool, right? I just hope that no one runs a stop sign.
Well, good for you, Rob.
And in many cases, you could even convert that term policy to a permanent policy. So you get re-underwritten again.
One of mine
but I actually think it's a good incentive. Like, actually, sometimes what we say to some clients, like if you're a smoker or you're at a weight where it's not affordable for you, there's ways to actually get cheaper life insurance. And that's actually through, certain lifestyle habits. This isn't always the case, certainly. But there actually are cases where people can take their own health in their own hands. And many...
I did that.
Some carriers will also have like programs. They'll give you a non-smoker rate on the promise that you will quit smoking.
Yeah.
Uh-huh.
And they will test you in a year and test you in 2 years. And if they're not, they'll start charging you more. But if you do, then it's really incredible. Like actually what, how in tune the incentives are in many ways.
So is the market competitive? I mean, you have these major, huge companies, insurers who are involved in life, right? I mean, State Farm's involved in life. AIG's the biggest of the biggest. very involved in life. They must like life. They must like life insurance.
Yeah, it is I would say a competitive market. There's certainly a number of like big name brand carriers. If you look at the Fortune 500, a good chunk of those are insurance companies, and probably half of those are life insurance companies. And, from a carrier standpoint, they have a lot of data, right? And they have a lot of comfort with it. Certainly as interest rates go up, it's actually better for life insurance, right? Because for all insurance, you get money up front, you pay it out over a longer arc of time. In life insurance too, you're underwriting events that'll happen 30 years in the future. So the more you're able to invest that cash in the meantime, the more competitive the product. So it actually in a way benefits from higher interest rates as well. And we think it's a great thing that there's a lot of competition. It's actually good for customers. If you look at part of the reason why, your new policy may have been more cost effective is just carriers have gotten better at underwriting. And really what's happened over the last 20 years is it's gotten much cheaper. For the same risk level score, for that 20-year term, you're probably paying, half as much as you would have 25 years ago. And that's just great for consumers. And, as part of that, from the very beginning, we really set off never to represent a product or a carrier. We don't actually really view ourselves as a life insurance company, like brokerage. We really.
What do you view yourself as?
Yeah, we're a risk management platform. Like we really want to help advisors meet the financial risk management needs of their clients. And I represent one person, and that's the advisor, and through that advisor, their clients. And we very intentionally have never represented a carrier, never represented a product. We're open as products innovate, as carriers get in and out of market and greater levels of competitiveness. Like we really want to provide the best support and offering to our advisors.
We really appreciate you being with us, and you've endured our technology problems today, and we appreciate your patience. I just want to ask you before we go. So life insurance is an ecosystem, right, of different pieces and parts and players. In 5 or 10 years, you must have some interesting ideas that haven't been fully vested yet of what modern life will be and become. Can you share any of that? Of where is it going?
Yeah, absolutely. I think for us, there's the very clear drumbeat of just continuing to build across the technology stack. And, advisors have many things they need to do across giving advice, across managing applications, across managing their deal flow and systems. And there's in tech speak, there's a lot of product surface area, and we're really busy, chipping away at that and building really distinctive experiences. We also think there's a lot of opportunity to innovate on the insurance products and the delivery of underwriting, and have some rich conversations with, carriers and other partners in how to make that real. And again, in the same way that we don't necessarily view ourselves as a life insurance company, life insurance very much is our core, but we think there's a number of products that are good for advisors to have that, they would love to, and we've heard demand for, to have within the same platform, within the same product and brokerage experience that, we're starting to expand our realm. We recently launched long-term care, both linked as a part of a life insurance policy and standalone, as well as disability insurance. And again, both of those came from just demand we had from advisors to expand our product portfolio.
But more products to your core customer.
Exactly. My customer is not going to change.
Not like a guy who's selling, or a person who's selling P&C, as an example.
Well, someone who's selling both.
Yeah. Yes.
Could be my customer.
Right.
Very much so.
Right. Okay. So you've done 5 podcasts, even though I know it's 9.
I thought 13. So.
Well, yeah,
it's 27. Yeah.
He wants you to believe. That's what he wants you to believe. So where do we rank? Okay.
I think you're very clearly number 1. This is a lot of fun.
Rock and roll.
Okay.
Rock and roll. Write that down.
Well, our work is done here.
Mark that time.
Our work is done here. That's right. Another success story for F&O InsureTech, ladies and gentlemen. What a pleasure to have you. Like I said at the beginning, we love life insurance. It's such Such an interesting area. We'd love to have you back on. There's so much more to cover, right? Including helping Lee and I get new policies.
That's right.
In fact,
thank you so much, Ryan.
We often ask guests, if they have swag that they could give us. But what your cool swag would be like a little life insurance policy.
A little. It's the gift that just keeps on giving.
Okay. Well, thank you.
Thank you so much, Michael.
Thank you so much for having me. This is a lot of fun.
Loved Michael. Might struggle with his last name, but great guy.
Yeah, I'm not even going to try. A great guy. We didn't talk about a lot of his past, like with the State Department.
Oh yeah. I mean, we blew it.
McKinsey,
we did a poor
Harvard,
job.
Princeton. We didn't talk about those things. But all that stuff came out. I mean, we're talking about a super smart guy.
You know who goes to Princeton? Not you or me.
Smart people.
Yep, smart people.
Smart. I had a friend named Ben. He went to Princeton. Mm-hmm. That's all I know about Princeton.
Yeah.
Yeah. I think didn't Will Smith go there? Fresh Prince of
a Beautiful Mind guy went there.
Oh yeah, he did.
Mm-hmm. Not Russell Crowe, but who Russell Crowe played or taught there or something. I don't know.
We digress. We digress.
Not for the first time.
Not for the first time.
In fact, we could call this FNO digression. Mm-hmm. Could be the new name of our podcast.
We've been digressing for the past 4 years.
That's right. And let us digress again and thank Michael.
Thank you, Michael,
for being with us. He had to cancel once before because of a little kid problem, but apparently it's all good. Wonderful man, nice man, great idea, simple. And this is what I love. Simple, beautiful idea.
It's a beautiful.
Right? I mean,
it's from a beautiful mind.
This is not highly complex.
No, it takes a highly complex thing and he's trying to make it simple. Mm-hmm. And that's the neat thing.
Mm-hmm. Yeah. Al, our engineer, John Forbes Nash Jr., a beautiful mind guy. That's who it was.
That's him.
Uh-huh. He was a graduate student. He was a graduate student at Princeton.
Yeah.
Anyways, listen, thank you, Michael. Thank you,
Catherine
at the PR company for bringing Michael to us. And thank all of you for once again putting up with us for all this time. And we'll finish by saying what we say pretty much every time that we can.
Goodbye, everybody.